I'm Tim Sustak, Chief Treasury Officer with Vizo Financial, and this is your FOMC update for the January 2025 meeting. At its latest meeting, the FOMC chose to maintain the target Fed funds range at a level of 4.25 to 4.5%, and they also maintained the rate on reserve balances at a level of 4.4%. The decision was unanimous. It was absolutely no surprise to the markets or anyone else that follows the Fed. The statement changed somewhat in two areas of note. First, the Fed characterized the jobs market as stable and solid rather than easing as it had in its last statement. Additionally, about inflation, they simply stated that it remains elevated, versus the acknowledgement in the last statement that progress was made towards the committee's 2% goal. Given the Fed took a pause on rate action this month, the change in language is not surprising, as a stable labor market and somewhat elevated inflation are good reasons to take a pause in a rate reduction campaign. The question is, how long will that pause be? And after the pause, what do policy adjustments look like? We'll see what additional information Chair Powell had for us about the future of rates in his press conference after the break.
In a world where risks evolve as quickly as solutions, Vizo Financial's 2025 Risk Management Conference has you covered. From cybersecurity to fraud, compliance to continuity, get armed with the tools, insights, and strategies to keep your credit union agile and resilient in the ever-changing world of risk. The revolving threats are coming, but you don't have to stand still while it happens. Join us for this year's Risk Management Conference so your credit union can learn to think about risk creatively, plan strategically, and lead confidently.
Welcome back. Chair Powell gave his prepared remarks to start the press conference. He said the economy has continued to expand at a solid pace, with GDP rising above 2% for 2024, solid labor market conditions, and inflation that has eased significantly over the past 2 years, but remains somewhat elevated relative to the longer-run goal of 2%. With the recent rate decreases, policy stance is less restrictive, so the committee does not need to be in a hurry to adjust policy. Chair Powell indicated that if the economy remains strong and inflation persists, the committee can maintain policy restraint longer. However, if the labor market were to weaken or inflation were to fall more quickly than expected, the committee can ease policy accordingly. He said the committee believes policy is in a good position to deal with the risks to both sides of the committee's dual mandate. In the question and answer session of the conference, Chair Powell had no real comment when asked about President Trump demanding a decrease in rates. He said he has had no contact with the president regarding that comment, and the committee plans to keep its head down and do its job. He said further, in response to another question about politics, that everyone should just look to the Fed to operate independent of politics because that is what they're designed to do. And he gave his assurance that is what they intend to do. As in last month's press conference, he answered questions about the new administration's policies and said the committee is in a wait-and-see mode concerning how they may affect the economy. Chair Powell addressed a number of questions concerning future rate moves and indicated that given conditions, the committee does not need to be in a hurry to make policy adjustments. He also indicated that it will take further progress on inflation or a weakening job market for rates to drop. Well, nothing unexpected and not much new. It is very apparent that this Fed is in a wait-and-see mode, and who can blame them? The economic numbers are pretty good, and they're evaluating a new administration's policies and how they will affect things moving forward. It's a logical point in time for them to take a pause on policy adjustments and grab their popcorn and soda and watch. Let's hope the movie does not deviate too much from the current plot. That's the FOMC update for January. Thanks for watching, and be well.